The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the September. How about that? Man, I'm really getting through summer, huh? How about the July 22nd? Fantastic Friday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure that you and I have an extraordinary day, an extraordinary weekend, and of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. If you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we're going to go look at the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free, pick up that phone. Now is not too early. 877-927-6648. Of course, internationally, 727-445-1044. Would love to hear from you. So let's go ahead and get this show started on fabulous and fantastic Friday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, the Dow's trade up 26 points at 18,543. S&P's up 7 at 2172. NASDAQ Composite up 26 points at about, we'll call it 5,100, 5099.80. You've got the Russell 2000 up about 10 points. She's trading at 1214. DAX closed down 9. FTSE up 30. Gold's back $8 right now. She's trading at 1322. Silver off 12 cents, trading at 1969. Light sweet crude back 82 pennies. She's trading at 43.93. Have a beer on me. That's what Sam Adams is saying. Sam Adams, our Boston Beer Company, SAM's a ticker symbol, up 17%. That's 28 buckaroonies out there. That's a beautiful thing. Chipotle, that's up $22. That's a trade down at $4.39. Biogen up $7. That's 2 3/4%. Puma Biotech up 20%. That's $7. Proof Point Inc. Not sure what they do, but they are having a nice day to the upside, nearly 11%. You've got Universal FST products. I don't know. Is that fast? I just forgot the A. That's up 6%. Equinix, that's up $6 out here. To the downside, there are some stocks. So stocks that are doing well to the upside are doing well, and stocks that are doing poorly to the downside are doing poorly. Some big volume, I believe. Athena Health, I think that's down with volume about 12%, $16. Auto Live, ALV, that's down 7.5%, I believe, with volume. Abaxis, down 15%. Skechers, sketching one to the downside, up 21% with volume behind that move. Stryker Corp, you got Skyworks Solutions, all down $6, $7 out here. So Olin Corp, we'll take a look at some of those equities. We'll take a look at anything that you like to. Just give us a call, 877-927-6648. So let's begin the day. It's almost the end of week 2 of the breakout. Let's just go take a look at where we're at in the market. This way will help us identify bullish or bearish, right? We'll just take a look at it. Let's look at what I've got termed as index consolidations. Now, this is a weekly chart. Dow is in the upper left. S&P is in the upper right. NDX 100 lower left. Russell 2000 lower right. So here's what we know. We've got breakouts at the party in 3 of these indices. You may say, how do you determine that? Well, if we take a look at the Dow, it's been trading in a consolidation that extends inside that rectangular box, that little yellow box out here. That began really back in 2013. Around November 2013. So nearly 2 years worth of sideways chop. This is week 2, above the breakout, above the consolidation. What does that mean? That means until price gets inside the bottom of the consolidation, price moves higher. You say where? I say 21,200. I say equal to or greater than the consolidation. Is it going to happen overnight? No. Is the Dow going to target 19,000 and that's it, kaput? No, not now. That's not the message right now. 20,000? No, I don't have a taker there. 21,000? Yeah. That is the target of the consolidation. This is over a period of time. It's taken 18 months to trade within the range of 15.3 up to the 18.2 level out there. In the right-hand corner, fighting in the yellow boxer shorts, we've got the S&P 500. That's a rectangular trading range. That's been in it since about February of 2014. So a little less time, but nonetheless a long-term consolidation out here. Week 2 above the consolidation highs. We've got a breakout until price gets down and back into the consolidation. There is only one reading, only one thing that you can surmise. The target, the next upside target, the next significant upside target, 24.56, give or take, a few points out there, or many points, maybe 10 points, something like that. But that is the target. Lower left, it's the NDX 100. It's having a pity party. It is whining. It is crying. It's wondering why has it not gotten the RSVP? Because if you look in the lower right panel, you're going to see the Russell 2000. Russell 2000, you see a uptrend line. That's the green line. That's off of the 2009 lows. You see a downtrend line, which has been broken. This has been broken for week 2. Is it up near its highs? No, it's not, but it's broken. It's descending trend. That says the trend inside the Russell 2000 has changed. Now it's going to be churning higher. Its target is just simply going to be set for the previous high in that 1291-ish type area, 1295-ish area back in June of 2015. But nonetheless, that chart is in a bullish mode out here, and it's all about the NDX 100. Every now and then you got to have a little show off, and I don't even know what that meant, but it's the NDX 100 that is still inside the consolidation. So we won't get the true conviction move inside these markets until we see the NDX 100 break out of its consolidation. It's been in that pattern, give or take, since about July of 2014. The real breakout occurs when the month of November is exceeded, November of 2015. You might ask what that is. I would tell you it's 47.39.75 out here. So if we see that occur, what you're going to have is synergy. Don't you just love that word, synergy? Because you will have all markets that have broken out to the upside in what is determined to be the unfavorable seasonal cycle. You know that old sell in May out there, and both you and I know, well, that's not exactly the case in the markets out here. But it is sell on July 20th. And that's important because the question is, have the markets taken out that July 20th high? And really only one market that Stevie's taking a look at. We'll take a look at that during the trading session out here today. But at this stage here, these charts look mighty bullish. If we go take a look at advanced decline oscillators out here, everything is bullish except for, even the Dow has just squeaked above the zero line. Not by much out here, but right now we've got everything that is in bullish mode on an shorter term time frame chart here. New York Stock Exchange broke a consolidation pattern. It's got an island bottom. It's got a target of 11,337 over time. It's very possible we're just going to see turning and churning for the next 5-6 trading sessions, maybe even just a slight pullback. But maybe, and I do say maybe, only back to those consolidation levels where price broke. And if that's it, and we take off to the upside, oh baby, what a fun summer it's going to be for you and I. This is Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So we took a look at weekly charts to help us understand exactly the message of the markets on that. We took a quick peek at the daily charts. Let's go look at the real resistance levels out here that we want to be paying attention to from a daily charting perspective out here. And we're going to take a look at the 4 equity futures contracts for the market. We're going to look at the ES Mini first. Now, the ES Mini, we've really been chopping around sideways all week long, so it's not necessarily been a fun time. You've got to be looking at some really shorter-term intraday trading charts out there in order to try to make some money during this past week out here. The range, though, that we're taking a look at to the upside is 21.70 1/4. Breaking above that, you would anticipate that the ES Mini would run to 22.04. The level of support is 21.48.75. And so breaking below that, that then says, okay, maybe you run all the way back down to that downdraft day from June the 24th out there. That would be old resistance, or should have been. That should become support out here. So that's perhaps the extent of a pullback and a retracement in the markets through next week out there. Just be careful. Just be careful to both sides, because we're in a little bit of a sideways chopping action out here. But clear the resistance of 21.70, pretty much a straight shot up to 22.05 as we speak right now inside the NQ. And what gives it promise that the ES Mini is going to go ahead and bust through that level is the mere fact that we've got the NQ that is trading above its daily profile out here. Let me just update this, make sure it's dead balls accurate out there. Oh, it was not a new weekly profile. I take that back. So when we take a look at the NQ out here, we can see that it is trading above. What the heck is it trading above? Where is that? That's interesting. Let me do that again. Let me just make sure that I've got the right numbers out there, because it didn't look like I did, and I want to make sure I gave you just dead on accuracy. We're looking at Fibonacci expansion. I'm going to go ahead. I'm going to go ahead and do it from here, from the trading day of April 19th down to the low out here on June 27th. So it looks to me like where the NQ is targeting its next move is up to about 46.87. I don't see anything that is in its way from moving to 46.87. So other than maybe some sellers camped out somewhere, but otherwise 46.87 is the number out here. And that's just the 1.272 expansion of its last set of swing points. Inside the Dow futures, I better just update it and make sure that this thing is a correct new market profile. It is. So in the Dow futures, the levels you're going to be paying attention to the upside it's going to be 18,521. The downside, from a support standpoint, it's going to be 18,349. You break 18,521, price ought to run to 18,682. Again, we're going down to daily charts, right? Totally different picture than that longer-term weekly chart, but this still gives you the guidelines that you're looking at. The market profile that we are in right now doesn't really give us a clue as to which way price wants to break. This is a range that you want to be paying attention to. In essence, the theory behind it is you would be selling 18,521 and you would be buying 18,349. I want to take a look at what's going on intraday charts as well if that were to occur. So that's the Dow. Nothing real Dow futures contract. Russell 2000, it's trying to break above resistance. 1212 is the number, 1212.40 to be exact. Support down here is going to be at 1186.36. So any move in the futures contract above 1212.40, and that says that the Russell 2000 wants higher price. Maybe it's the Russell that's going to go ahead and give us the next clue as to what it wants to do, whether it's a breakout, break dancing, head on higher out here, because, that's the leader of at least of Stevie's pack out here. Okay, so we've got the daily perspective. We know what numbers we're looking at. It's been choppy market, so that means, hey, let's go take a look at some intraday charts, see what we've got out here. Let's take a look at 30-minute charts. Let's take a look at which 30-minute chart? Let's take a look at this 30-minute chart. Let's look at the ES Mini. The ES Mini out here yesterday at about 3 o'clock, forming a nice Gartley buy, nice little hammer candle that formed out here at 3 p.m. We know that each Gartley pattern, in this case here it's a Gartley buy, has 5 different outcomes. Outcome number 1 is a dead cat bounce point 382 retracement. Well, we saw that take place really right away, right into the 330 time frame, where price just kind of stuck around the 2159 area. And then at about 4:30 this morning, it was off to the races, on to level number 2. Level number 2, 2163 and 3 ticks out there. And price basically stopped dead in its tracks. Then it went ahead and moved sideways, even pulled back into 930, where it tested one of its TAS market profiles out here, where Stevie's just going to update that and get the brand new ones. It tested the bottom. That was support. Then there's a new A to B equals. There's been 2 A to B equals CD patterns here to the upside, and now it's hanging out right at its 0.786 retracement. In fact, it is testing. It's making, in essence, outcome number 4, which is the 100% move of a move, and that is by testing the swing point from 3 in the morning on July 21st. The range of that swing point, I would tell you what it is if I can see it. It is the 2166.75, and the high of that is 2170 and a quarter. So if price gets above 2170 and a quarter, that would be outcome number 4. Then what does that say? That says then you've got butterfly time. You've got a larger, whoa, what the Sam heck? Not Sam Adams, Sam Heck happened there. That says you've got a larger A to B equals CD. And where would that take us to? Well, Stevie would say I would go ahead and take a look at my A point being down here on July 19th at about 4 a.m., the B point out here at 3 a.m. on the 21st, and yesterday's hammer candle. And that would target about 2172.50 out there. So at this stage, is there anything on a 30-minute chart that suggests to us that the ES Mini does not want to move higher? Anything on a 30-minute chart. If you were using a 30-minute chart, the absolute answer to that would be no way, not a chance. In fact, everything on the 30-minute chart says it's going to exceed 2070 and a quarter. It's going to exceed 2172.50 out there. It's been a pretty strong move from earlier this morning. We'll see what it looks like on Sunday evening out here. But at this stage of the game, hey, you're at a level where people are getting off the elevator. That is all that is going on right now. That's what those Fibonacci floors are used for. So you've got buyers and sellers kind of getting off, but there's no other signals here on the 30-minute chart for the ES Mini. How about the NQ? As really, in the case of the NQ, you don't think this thing is giving you a signal out here or two? Take a look at it on the 30-minute basis. It's all the way back up to its highs. Its highs being, let's go ahead and put a line across it, Johnny. That's going to be 46.62 and a quarter. So if you see price take out 46.62 and a quarter, it's already tried to do that, it will lift all boats higher, because this is the tide out here. This is the laundry detergent that'll take your laundry. It'll make it clean. It'll move it to higher prices out there. And of course, you say, how high will it go? Well, I'd say at this stage, pretty good chance that what we have is a nice little consolidation. So we've got a measured move that you and I can go ahead and try to figure out where price would head to if it takes out that 46.22 4662.25 range at the end of the day. That's going to take you to, give me a moment here, we'll put up the box, and that box says it would be targeting 46.96. Of course, if you were in Detroit, you might be on I-696 out there, a little different than 4696, but that would be the target for the NQ if it can clear this 46.62 and 25 cents out there. So we know the Russell, strong leg bull. The NQ right now, strong leg bull. You know what a bullish market needs in order to continue being bullish? It needs the NQ and the Russell 2000 to be the leaders of the pack. This is Steve Rhodes with TFNN. That's what it looks like to me. There you go. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back up, folks. Dow's up 27. Got an email that came in from Jason. Jason says, Steve, you bull you. What would it take? What would it take to change your minds that the markets are going to move lower? Well, Jason, that's a good question out here. I'll tell you what, I'll make it easy since most people aren't intraday type traders out here, and are more swingish and want to say, take a look at the longer term trends out here. I'll put this chart up on my screen for you. And that way we're taking a look. Hopefully you're watching this on Tiger TV. And if you are, I've got 1, 2, 3, 4, 5 panels. So I'm covering a good number of the indices out here. I've got the S&P as the top panel. Dow Jones is the second panel. NDX 100, that is panel number 3. Russell 2000, panel number 4. And panel number 5 is the New York Stock Exchange. Now, it's a relatively clean chart that you're looking at, and all that we really have is Stevie's red line. And that's the red line that you and I as traders pay close attention to. Because what this helps you and I to do, what it helps us to do is to understand which side of the trade should be eliminated. Now, I say which side of the trade should be eliminated. That's assuming that you don't have any other type of leading indicator pattern. At this stage, I don't have anything labeled. I don't have A to B equals CDs. I don't have price relative strength. I don't have seventh wave moves out here. But it helps us to eliminate one side of the trade. Now, at this stage here, once price got above that red line, let me get my crosshair out here, just give you an example. Once price in the S&P 500 got across that level, that was on the trading day of June 30th, that was saying don't be short the market. That was June 30th. Let's just somehow say you missed out on some of the move out here. You didn't get a piece of that bullish move out here. How would that have helped you? If you were a Mastering Probability subscriber, you would have known that. Well, actually, you would have caught the market right there on the turn on June the 28th, I think it was, 28th. Yeah, that's when you would have caught the move to the upside. But if you have subscribed the following day, you would have seen, hey, it was also time to go along the market. That's in the S&P 500. In the case of the Dow, the Dow Jones Industrials, it also gave us that message. That was on July the 1st. That's when the message came in there. Actually, you got to close above it on June 30th right there. That was right there saying, hey, it is time to be long, not time to be short. Take a look at the NDX 100. Same message coming in on July 1st. The Russell 2000. Same message comes in on that day. The New York Stock Exchange as well, sometimes beat up and battered for no good reason whatsoever. And so when price is above that red line, it is telling you to eliminate the short side of the market. That's using daily signals out here. And so what would it take for me to say we've got a change in trend, a retracement to change in trend in place? It requires price to close below Stevie's red line. And this is not the politician's red line. This is like a red line that you heed, like your best friend. It is one of my best friends out here. Now, the question is, what is the red line on your chart? It's referred to, Tucker, as the oscillator unchanged line out there. It's a tool. Subscribers have get access to a 1-hour workshop that I did on it. If it's something you'd really like to know if you're an active trader. So just go test drive Mastering Probability or sign up for a month and you get access to all that good education out here. So the number, Jason, just to answer your question, because your question was specifically about the S&P 500, so I'll pull that out here. The S&P 500, the number there is, drum roll, Johnny. Johnny didn't even play the drums, did he? And it wasn't Doc. Who was the drummer in the Doc's band out there? Ed Shaughnessy, was that the guy's name? I think it was Shaughnessy. Was it not? Anyways, 2160.15 right now. That'll change up and down a bit. But if you see a close below that on a daily basis, 2160.15, that'll tell you that there is very likely a change in trend that is underway. And until you get below that, all you've got is just normal chopping around or some kind of retracement out here. And again, this is not for intraday type traders out here. This is for daily traders. And you could use the same kind of thing on a weekly and on a monthly chart, just depending on your time frame horizon out here. But as we see right now, we take a look at these fine and 5 markets out here. There is not a single, I do repeat, not a single bearish message out there. And that goes with the Wilshire 5000 and, basically you name it out there. And speaking of you name it, let's go, let me change over to this pattern. Let's just take a look at what's going on internationally, right? One world markets, so to speak, out here. Let's go ahead and pull open this chart. Now we get to take a look at the DAX in Germany, the FTSE in the UK, the Nikkei in Japan. Had a nice movement to the downside yesterday, but that doesn't mean diddly out here. Hang Seng out here in Hong Kong, the Shanghai in China. There's only one chart out here that says, maybe there's some type of problems underneath the covers, and that is the Shanghai. We see that today we saw a price close below Stevie's red line out here. What does that say? That say I would anticipate that come Sunday evening, we ought to see the Shanghai continue to pull back. But we do not have that message in any other chart. We've seen the FTSE over the course of the last couple of days test Stevie's red line. But, oh my God, what did I do out there? Did I lose it? Oh, I just must have closed it out there. Sorry about that. No, that wasn't it. Very interesting. I lost my den. That's really weird. But I think everybody's still there, isn't it? Yeah, I think we're good. I think we're good. Okay, good. I think we're good. Yeah. Just kind of lost everything. And I think things are okay. All right, we are here. Thank you very much. All right, so as we take a look at this, the DAX, bullish territory. The FTSE, as I was saying, was testing that level. That's just testing a level of support. Didn't break through it. But you'll want to watch it. Want to watch the FTSE for sure, because it's the closest right now to the next international indice that could go ahead and crack. And the reason we want to watch the FTSE is because it tracks the U.S. stock market really well out here. So we'd want to watch to see what goes on in the FTSE. But international markets across the globe, everything looks long and strong out here with regard to its oscillator unchanged line out there, a extraordinary tool for helping you to eliminate one side of the chart. Now, since we don't have any other questions out here, none that I see, none in the den out here, none on my email system, steve@tfnn.com, let's just go take a look at some of the individual stocks. Let's do that. And let's take a look at Sam Adams. Let's take a look at Boston Beer. Huge breakout today. Big volume, 789,713 shares. And looks to me, how about that? Looks to me like it's getting ready to run into PS de resistance out here. You might say, why do you say that? Let me turn off the market profiles. That'll probably be easier, and then we can go back a little bit further out here. And in fact, let's put this on what looks like maybe a weekly chart. This looks like a long-term descending price channel. Oh my goodness, it most certainly is. So is Sam Adams, is Boston Beer ready to go ahead and break out? If it can break above this descending price channel, which began really all the way back in January. I don't know why I got September on my mind, but back in January of 2015, you can see it's been in a nice defined descending price channel. So price doesn't end on wide-ranging bars like today's, like this week's, typically. So price could go a little bit higher, but until it breaks this trend line, Sam Adams here just had a nice little, we'll call it, what do you call it? The grand finale, right? The grand finale of fireworks looks like maybe in place here for Boston Beer, ticker symbol SAM. Of course, we would think differently if it can break through this descending price channel. Right now, we got the Dow 22, S&P's up 7. This is Steve Rhodes with TFNN. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed with TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Another question that came in during the break. Do I know where light sweet crude is headed to next? Right now, we've got light sweet crude trading out at $43.76. It's back about $1. And here's what we know when we take a look at the daily contract. We know that price is trading below both daily and weekly TAS profile, so there's no level of support. There's only a level of resistance, which would be $45.71. And what we also know is from the low, this is back here on January 20th, to the high. This is out here on June the 9th. We know that prices now dip below that 0.382 retracement elevator floor. And that says time to go down to the 0.618 area. So I would say the target, next target inside of light sweet crude is going to be 40.44. That would beg the question, well, if light sweet crude is going lower, how is it that the market's going higher? The only answer I've got is the correlation is undone. It's come undone. Who sings that song? Guess who, right? I won't sing that rendition for you because I don't want to just simply be thrown off the air. Karaoke night and a couple glasses of sake, I would probably change my mind, but it's not karaoke night, and I've had no sake. So we're taking a look at 40.44 is the likely next price projection for light sweet crude. I don't see any patterns here on a daily basis that would go ahead and turn things around. Hey, let's go out to Steve in Nashua. Steve, thanks for calling. Thanks for holding. How are you doing this afternoon?
Hey, Steve. How are you?
Good. Thank you. Thanks for asking.
Good, good. Hey, I meant to call earlier to talk to Tom and Tommy. They were trashing, not trashing. They were talking big-time coffee yesterday. About the different coffee wars going on. And they said, Steve from Nashua, I'm the Dunkin' Donuts guy, you know.
Oh, okay. Well, now
I'll call him Monday.
I'm not a coffee aficionado. So who has the best coffee? Who has the best coffee?
Neither am I, but yeah. Say, I just tuned in. I didn't know if you talked about gold at all, but I was wondering where you believe it might be going. I know earlier you said you think it might be going down, but is the best thing to look at like GDX or the contract GCJ whatever? Or?
Well, the best thing where I get the most information from in the case of gold would be by taking a look at the actual contract. So I would look at the contract in order because then what you've got out there is it's really all about understanding the patterns where you've got an instrument that's basically trading 24 hours a day. And so it's about price discovery, and we just don't get that type of information when we take a look at the underlying ETF. It's not that it's a bad thing. It's just that the patterns that I look at to assist me with, hey, what's it going to be doing on this time frame or that time frame, really I can tell you with conviction, it works really well, and take a look at the individual contract. At this stage of the game right now, and I'm looking on Tiger TV at the daily chart for both gold and for silver. And if we take a look at, I've mentioned a red line that I take a look at. As long as gold continues to trade below 1343.80, this number will change, by day, but 1343.80, and as long as silver trades below $20.26, it says at a minimum there is a retracement that is underway. And if it continues to move lower, should the price oscillator line, which is these little panels right below the chart that I'm looking at, should they move below zero, then that says, okay, we've got the bigger retracement that has really kicked in. Now, gold needs to bust through 13.15.10 is the number. And, Steve, until it does that, maybe we're just in this little bit of a sideways range out here. But if it were to close below that 13.15, then that gives us a signal that it's time for it to move lower. And with regard to the how low, where's it going to go? I'm just actually more looking at time right now. I think gold will go lower through October.
October, yeah. What is the contract you're looking at, Steve? It's like GC something?
I am looking at GCQ, okay, and Q is the August contract for gold.
GCQ8, probably?
GCQ 6 on my system, because I have a way to not have to actually pay for it. I've got an =1 sign, but that typically it's not going to work on most people's systems.
I have it.
Okay, yeah. So you want to pay. Yeah, you want to pay attention to that, and the other areas to be paying attention to. Let me go ahead and put this up on my chart here. Put the gold contract. The other levels that you want to be paying attention to inside of gold at 13.15 is really going to be key. If it breaks below that, then the next level before it should find some support would be 1289.50, and then if it breaks that, then you're looking at 1253. Then you're looking at 1176 as the price targets. But at this stage here, just got to take things really one moment at a time out here. One thing at a time.
Yes, sir. Thank you very much. Have a great weekend.
You bet. Thanks so much for calling. That was Steve in Nashua, the Dunkin' Donuts guy out there. God, as a kid, I could not have survived delivering the Detroit Free Press without Dunkin' Donuts. I used to have to drive. I'd take my bike, my old black Schwinn, with those big motorcycle handlebars and that big thing on the back, and get up awful early in the morning, go get those papers. But, of course, I would first stop at Dunkin' Donuts, get a donut, no coffee. Just, while I was a kid, we just needed a little sugar to get us going at 5 in the morning, deliver those papers, and then swoosh, off to school. Home from school, drive up, and go get the Detroit news out there. That was a beautiful thing. We had 2 newspapers out there, and that was great. And there was nothing like going on Fridays and collecting, right, from, some people. Some people, they try to stiff you. Remember back then, how much was the paper per week? It was, because I got paid in a lot of silver. I got quarters and dimes, and my dad, what a smart guy he was. I'd come back. What did I know? He taught me, of course, and I'd come back and he'd go through all my change and he would pull out all of the silver. He'd be happy to give me a little bit extra for the effort out there. So in any event, I don't even know Dunkin' Donuts. That's how we got on that. I can't eat any donuts anymore. Those donuts, man, they really got to my stomach. So I've been working too hard to get all that off. Okay, so let's go back to these markets out here. Boy, it's a quiet day. It's a quiet day in the den. I feel like what's the guy's name? Brain contusion out there. But it's quiet in the den. Quiet on the phone lines, quiet on the email lines out here. It must be a Friday in the summertime. Everybody must be out golfing or having a good time or in the water, in the ocean. So what do we want to look at next? Hey, we covered gold. We really covered silver. So you have my take there. We took a look at light sweet crude. We looked at the markets for the most part. Let's just continue looking at some of these individual stocks. Let's go see where individual stocks are headed to. Let's take a look at Chipotle, CMG. What a nice day this is having. Looks like this is out on earnings out here. Net income of $25 million. What? Chipotle Mexican Grill, Quarter two, net income, $25.6 million versus $140.2 million last year. How about that? And that is a big celebration out there. Well, nonetheless, shareholders here are bidding this thing up with some volume behind it, 3.1 million shares. Let's go put this on a little bit of a longer-term chart. Let's go see if we've got a trend out here to pay attention to. Let's go ahead and turn off our profiles. Give me a moment to do that. I'll do it while we are going to this breakout here. So we're going to come back. I think we're going to have about 4 minutes or so to make it through. Don't let me wake you up. Don't let me do that. This is Steve Rhodes with TFNN. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David Dwight as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Dow's up 27, S&P is up 8. Let's go to Ron in Denver. Ron, thanks for calling. Thanks for keeping me company. How are you doing this afternoon?
Thank you. And thank you, Steve, and I want to compliment you on a great job you do. And after today, I will be a subscriber. I'm going to join up here.
Well, thank you.
I called a couple days ago, and I didn't know I was supposed to be on the phone. I was talking about Qualcomm. I knew they were bringing out earnings, and I liked it, but it jumped up about $4 after the earnings. Yesterday, I bought puts on PayPal, and that's good. I came out this morning because it dropped off. What I was calling about was Gilead. They're bringing out earnings Monday, and the biotech sector seems to be strong, so the sector is good. But what do you think of the stock?
You know, it's interesting.
GILD?
It's interesting. Yeah, it's interesting because it has a similar pattern to Qualcomm with regard to that it hadn't taken out its resistance area. And the resistance in this is much higher up. So the question is, where is some logical resistance inside of Gilead, GILD, folks? And that's going to be at the $92.53 level. And that's where this thing had gapped down with big volume on April 29th. The volume to the downside was 33 million shares. So all of the folks, Ron, between April 28th and April 29th are going to be just happy. It should be a large supply line. They're just happy to get their money back because when this equity moved down to lows on June 27th, got to about $77, I bet you most of those people were thinking, oh, my goodness, I'm really on the wrong side of this trade out here. So, is there any other signal with regard to what it might do? I think you hit the nail on the head in that the biotech sector itself, stocks involved in the IBB, and I would go back, maybe over the weekend, I'd take a look at the top 10 of those individual stocks, or those stocks that have reported, to get a feel for what the pattern might be out here. But some of them that I have been looking at, I would agree with you. It seems as if, and this won't, hold true for all of them, but it sure seems like many of them are moving to the upside. So I think you've got it pretty much nailed, but 92.53 ought to be the resistance area. And if it can get above that, then what it's looking at is probably about 96.80, and that's on Gilead. You mentioned Qualcomm, QCOM, and that did gap up out there, certainly, and that took out its first level of resistance, which was that big move down with volume on November 5th. And in essence, it's really right now at that supply line level, which is around the 61.18 area. But it had a nice move. If it can move above 61.18, then there's no reason for this thing to not set its sights on maybe the next swing point at $66 or maybe even 71. But if you're looking for a buy on this, it would now be probably be moving back and testing about the $56 level. That's the way that I'm seeing it right now.
Super. Well, thank you very much, and you'll get my subscription here at the end of the day. Thanks.
Oh, that's great. You bet. Thanks so much for calling. That was Ron in Denver. That was Gilead, G-I-L-D. Okay, folks, so we're about to end the day out here. Here's what we know about the markets. We look at the weekly charts out there. They are all bullish with the exception of the NDX 100. And I do believe that next week is a huge reporting week, right? I think we might have Google, we might have Apple. Who else do we have out there that's reported? I believe that Tom O'Brien, the Obi-Wan Kenobi, is going to be doing a workshop. I thought I saw something coming across my desk out there. So at this stage, the question is going to be, will the NDX 100 take out that resistance zone? And that's what we'll be watching, because if we do, it's a big party up through about the middle of September, and that's why September has been on my mind all day. Folks, stay tuned. Our man David White, our polar bear, he's going to be up next, and of course Tom O'Brien from 3 to 5. Have a fantastic, fabulous weekend. I'll see you on magical, marvelous, magnificent Monday. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.